bit of a two-pronged question. As you've been talking there, I've been looking at what the market's doing now. So just for, not that I want to timestamp too much, but we're recording this on a Friday. Last Friday, we had something like a 2% decline in the markets. And then the first couple of days this week, it was, up and made that back and maybe then some. And then today, I'm looking at it right now, it's down 1.2%. Although I note that my portfolio is up 2%, so I'm 3% ahead. But a lot of the time in this sort of volatility, you'll hear about the volatility in the nightly news. The guy will get up on the screen saying in finance today, the ASX dropped 2%, but you won't hear about the, 1 or 2% it makes back the next week. You only hear about the bad things. So I guess for the average person watching this who isn't as well versed in the financial markets as you or I or Marvin or Jesse, what would be your message to them about how much attention to pay those headlines? And the two-pronged question is, for Longsec, how are you looking to, I guess, manage things over the next, say, 12 months or so? What's the things that are grabbing your attention?
Yeah, look, it's very topical, interesting question. The first advice would be not to look at the market every day if it bothers you. But look, generally speaking, what volatility is a part of life. It's nothing new. We go through phases in the market where there's high volatility and lower volatility. And on what we're experiencing right now, looking back at history, there are always risks. There's new technologies, geopolitical issues somewhere in the world, structural changes happening in any particular sector at any given time. So from our perspective, from my perspective, volatility means opportunity. Because if you're looking to invest in quality assets that everyone else wants to invest in, volatility creates an opportunity for you to purchase an asset at a more attractive price than otherwise. But from our perspective, look, a well-managed portfolio is not built reactively to market conditions in terms of the volatility and the news flow. Before the volatile periods, we're already thinking about diversification across geographies, across companies. This is exactly what we were talking about before, about not sort of being too overexposed to one particular theme, thematic or region or company. You got to look at your concentration risk in the portfolio, your liquidity risk in the portfolio, balance sheet exposures, correlation between assets. So all these and many other factors are already factored in to our asset allocation model to come up with the end result that captures and balances all these risks so that we don't have to react to every shock that's out there. The goal is not to predict every shock. The goal is to build resilience in the portfolio in advance so you don't have to. And when volatility hits, we've looked for opportunities to adjust the portfolio at the margin, not rebuilding the portfolio or going to cash because there is a sell-off in the market. So our aim is first and foremost the long-term returns over that respective over the respective time frame for the risk profile that we've built the portfolio for. And look, the important thing is that the bulk of your returns from a multi-asset portfolio is generated from its strategic asset allocation, and that needs time to play out. And look, we've built a track record of over 20 years with every single portfolio, with every single risk profile that we've managed over that time frame has exceeded its return objectives for that period. That's despite the GFC, that's despite COVID, that's despite everything that's in between. And there's been a lot of volatility in that time frame. But if you stick to your investment beliefs and your long-term investment horizons, that's the best way to, I guess, be at peace with the volatility that you're seeing in the market, and know that we are looking at that volatility and we are looking for that opportunity that we've been waiting for, that the market's presenting itself to us.